So Berkshire Hathaway, the big conglomerate led by Warren Buffett, is sitting on over $140 billion of cash. It has tremendous financial flexibility. Not only does it have that cash, it has a lot of credit. So Tyler and I are going to have a little fun and talk about a couple of stocks we think Buffett should put some of that money into. Before we do, please take a minute and check out the link on your screen for a message from our sponsor, The Motley Fool. You can get the top 10 stocks to buy right now, and it's the best way to support this work we're doing. So I'll go first with this one.
Always a
To be
fun
fair,
exercise. Always a fun
yeah.
exercise to pretend that we know what Warren Buffett's going to buy next,
Now Buffett rarely listens to me.
if ever.
I've done.
He never listens
I've
to me.
been
I know that.
well. I've been writing about and talking about the stock market for about 14 years now, and I've done more of these what Buffett should buy pieces and videos than I can count. And on occasion, he takes my advice. Um, I said he should invest in a net lease REIT. That he bought Store Capital. There are a few that I've kind of got right, but I'm going to go with one. And I've said that Buffett should buy this entire business with Berkshire's cash because he could, and that is Starbucks. Um, it's a very Buffett-like business. I think of it along the lines of how Buffett bought Dairy Queen. It's great product, great loyal following, good economics. And the Starbucks is down 18% from its recent highs. It's pulled back quite a bit lately, and it seems like a pretty decent entry point. I'd settle for Buffett buying just some shares of it right now, but I think this would make a great addition to the Berkshire conglomerate in general. It is it's established a pretty nice dividend record as it transitions from growth mode in the 90s and 2000s to kind of maturity. It's not a high dividend stock. It has a 2.2% yield, but it's increased the dividend 13 consecutive years, including a 7.5% increase it announced yesterday. Its results are impressive for such a big, mature food service business. Its sales were up 14% year over year. Starbucks is now generating about $40 billion of annualized revenue. Sales were an all-time high in the third quarter, or it's its third fiscal quarter. And same-store sales are up 10%. It's doing a great job of getting people to spend more. It's not just inflation that they're passing on, that's some of it, but they're doing a good job of adding kind of complimentary food offerings to their products and getting people to show up in the afternoon by offering, cold beverages on a hot day more than they used to and things like that. I could also make the argument that Starbucks, not Square, not PayPal, was the first mover when it comes to cashless payments. No one did cashless payments better than Starbucks when they rolled out their mobile app. I can't think of a company that did. And now it's Starbucks Rewards program has over 31 million members. I think that is very low compared to just the percent of people that I know who regularly go to Starbucks. The operating margins actually expanded year over year. Earnings are up 25% year over year per share. The only thing that's not a Buffett-like quality about this business is its valuation. Warren Buffett does not like to pay more than, say, 15 times forward earnings for his stock. He has in the past and been very right about it. When he bought most of his Apple stake, it was trading for more than that. But it's trading for 25 times forward earnings. That's probably a turnoff to Buffett, but I feel like this is one of the businesses where you get what you pay for. Tyler, what do you got?
I, I was just going to an anecdotal on Starbucks. I think the last 10 times I've been into a Starbucks, I've barely seen them make coffee. It's all these
Well,
high,
when
high calorie,
Well,
high milk, high sugar drinks. And I'm like, whoa, this is like a milkshake company that sells caffeine.
it's true, and I mean, I have two little kids, so when I go through the Starbucks drive-through, I have to get them. My daughter likes the pink drink. My son wants a cake pop. It turns into a $20 trip for me to get one cup of coffee that I want. So
That's why
I'm still a
I
Starbucks coffee
never go to
drinker.
Starbucks with my kids. That for that
Well,
very
yeah,
reason.
it's a good plan, but I'm a Starbucks coffee drinker,
Yeah,
and I end up with like three or four non-coffee items on my bill.
yeah.
So, what's the stock that you think Buffett should buy?
All right, so I'm gonna go. Nope, this is not a well-known brand name, unless perhaps you've. had a busted water heater lately and need to go buy a new one. And then you might have heard of them. This company is called A.O. Smith Corporation. As I just mentioned, they're one of the largest manufacturers of residential and commercial water heaters and boilers, basically anything that creates hot water for your house. And this doesn't sound like a great business at first, right? You're like, oh, water heaters. Oh, why is that? Well, here's the most fascinating thing to me about water heaters. More than 85% of water heater purchases are replacements of existing systems. And let's just face it, like when your hot water heater breaks, you don't sit around for 3 weeks waiting for another one to install. It's something that pretty much gets replaced immediately. And it's not exactly the most economically sensitive business out there relative to other things that, are tied to like construction and housing and things like that, where it's going to wax and wane with construction cycles. So you have a very durable business in terms of, sales are pretty consistent and you can pretty much plug in decent pricing increases with, I think they have like 40% of the market in the United States in terms of residential water heaters. So leading player, very durable business, decent returns. This is a business that's had returns on capital, returns on equity, somewhere in the 15 to 20% range for more than 20 years. That all, bodes itself well to what you would expect from from a Berkshire Hathaway kind of stock. Very durable business, high returns on capital. It spits out a lot of cash relative to like how much it actually needs to reinvest in the business. So lots of cash to redeploy to other things. That right there is like, to me, one of the things that Berkshire Hathaway is looking for when it's wanting to make investments. If there's one thing that probably doesn't look attractive right now, is it has a pretty large exposure to the Chinese market. And a couple of years ago, we would have said, great, awesome, there's your big growth lever for water heater sales. Well, we've kind of seen construction growth there really stall out. The Chinese economy is really slowing down. And that is not a replacement of existing systems market. That's a new systems market. And with that kind of declining, you could argue, well, maybe things aren't going to be as hot there. But, they are looking to go into other high growth markets. The Indian market is one that they're moving into, and a lot of basically emerging markets where you have a very rapidly growing middle class, where something like a hot water heater in the house is going to be an essential product. So that's the biggest bull case that you can make for A.O. Smith. And very much like Starbucks, this, as great as the business is, and I think it checks a lot of the boxes that Berkshire Hathaway would be looking for in a business. The one thing that obviously may not make it happen right now is valuation as well. As it's less expensive than Starbucks right now, it trades for a forward price to earnings ratio. So basically, next 12-month estimate of 18.2 times, which doesn't sound cheap, or it doesn't sound super expensive, but we all kind of know Berkshire Hathaway is very scrutinous with the price it wants to pay for its stocks. And I could definitely see Berkshire Hathaway coming in if this was a company that was trading for 15, 12, 10 times earnings, something like that. That's much more in the Berkshire Hathaway range. So, hey, if we happen to hit a big market skid and A.O. Smith's stock starts to decline, this really looks like something that, they might kind of, have a little pin on the board and says, when it hits this, go get it. And it just really seems to me like something that you could easily see a headline that says Berkshire Hathaway buys A.O. Smith, and you're like, yeah, of course they did.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by nearly 4 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 504% as of September 8th, 2023, and are measured against the S&P 500 returns of 130% as of September 8th, 2023.